Hi, and welcome to the weekly market update for Morton Brown Family Wealth. And this is the week of March 8th, 2021. I'm Dennis Morton here with Cody Demmel. How are you, Cody?
Good, how are you?
Great. So today we're going to talk a little bit about the state of the advice industry. And Cody recently shared a little bit of his origin story, and I've shared mine in the past. Both of us began in Wall Street firms and had to zig and zag really to arrive at a place where we are fiduciaries advising our clients. Cody, let's start off talking about your story, where you started, and the path that it took to get to being a fiduciary.
Yeah, so after I graduated college, I started an Axe Advisor for a year, and then I wanted to go to a broker-dealer because I thought it would help me grow my business with the name recognition. So I went to Morgan Stanley. That was for 4 years. I was in their 3-year financial advisor associate training program, which is good, and that's an interesting topic to talk about. It was a little less than a 10% pass rate that I went through the 3-year program. So, I mean, it's definitely a tough program, but that was great. After I went through that, I realized I wanted to be on a team. So I left. I went to a different firm that didn't exactly work out on how the team atmosphere was supposed to be. And then last year, obviously, I started here, which has been great.
So how did they define success when you're in the training programs? Like, what do they look at and say, all right, you're succeeding or not succeeding?
Revenue, monthly.
Yeah. So we both have that in common. That I started out in Smith Barney world 15 years ago, and actually had to generate commissions. And I decided to build a fee-based business, which is what we have here at Morton Brown now. But fee-based doesn't generate as much commission right up front, so I actually lost my job and had to go find another place to try again and get traction. So that speaks to some of the state of the industry, where people like Cody and I, who really want to succeed in the profession, have to bob and weave and fight against a compensation model just to get to a place where we can work with clients and place their interests ahead of our own. So what has ended up happening is there's an advisor shortage that's not getting better, it's only getting worse. And we found an article from Michael Kitces from a little while back, but it talked about this air pocket that exists. What did he say about the lack of financial advisory talent coming into the business?
Yeah, so it's actually close to 40% of the advisors are over age 55, which is just crazy. And then obviously, if you have such a tough hurdle to get through the first couple of years, some people obviously get devastated if they don't pass and they don't stick it out and just go into a different career and then maybe come back later in life. But yeah, it's definitely interesting.
Yeah, like 1/3 of advisors are expected to retire over the next decade. And the challenge that we hear about is that if you're an advisor who's 60 or 65 and looking to transition your book, they're looking and saying, where are all the 40-year-olds with 15, 20 years of experience and some runway ahead of them? So this speaks to the trend of there not being enough advisors who are 40 years old with enough experience to step in and manage these relationships because they were all fired or didn't make enough commissions, or they just weren't hired in the first place after the great financial crisis. And now the industry is looking up and say, where are all the talented people? We didn't train them and groom them. So historically, this industry has had a habit of eating its young, and now we're left to deal with that issue. The problem is there's a greater demand for advice than ever. People are looking for it. There's a lot of demand, but aren't the credentialed people. We're both, or you're sitting for the CFP exam. I'm a certified financial planner. What's the data on the number of CFPs that are out there? Even of the advisors there are, how many of them are CFPs?
Less than 30%, which is crazy. And then you think about, I mean, we're obviously a registered investment advisor, so we have to act as a fiduciary. And then obviously you and Katie have your CFP on top of it. I'm sitting for mine, which is great. But then if someone on the broker dealer side, they have to do what is suitable for the client. It doesn't mean that's what's best for the client. They have to make sure it's suitable.
Right. So if there's a senior advisor who's been in the industry for a couple of decades, who's thinking about retirement, there's even a lot of constraints that are being placed on them. So their parent company, if you're sitting at a bank-owned brokerage or something like that, there's a lot of pressure to keep those assets there. Make sure you don't leave and set up a firm like Morton Brown over across the street. So there are a lot of retirement and succession plans being put in place. And there was an article in wealthmanagement.com about one firm, Merrill, putting in place a succession planning agreement that has a 2-year non-compete agreement. So if you're a senior advisor and suddenly you've signed off on this, if all of a sudden you don't like the decisions that are being made or the culture changes or anything else, you can't do your work. You're prohibited from doing your work for 2 years if you try and leave. And that just suddenly, it makes you realize that, oh my gosh, that the decisions are originating at the parent company. They're affecting the way advice is provided, and the client's experience is going to be the one where they feel it. So, how does that translate its way down to the client? I think, and if you were in a succession role, Cody, like if you're the person waiting for that person to retire, that puts you in a bind too.
Okay. Yeah.
One of the ways that we've tried to be proactive about this in the past is, sometimes you have to wonder, like, what questions should you be asking an advisor to figure out if some of these things are churning in the background? Like, what is your succession plan? What is happening? Who's going to be providing the advice? What are your credentials? Even on our website, we've put frequently asked questions, which is if you're interviewing an advisor and wondering if this person's right for you, what questions should you ask? Or what are some things that people should be asking their advisor, Cody?
I mean, I think there's obviously a lot of questions you should ask. I think the most important is, if you are a fiduciary, do you have to act as a fiduciary for me? Not what's suitable, but do you have to actually act as a fiduciary and do what is best for me as a client? Right.
So, questions like, how do you get paid? What are your credentials? What are there's a lot of alphabet soup. What are the letters after your name? What's a typical client for you? But coming back to the discussions about the business of financial advice, who's making the decisions? Who decides what investments are available to me? Who decides how you get paid or what your bonus or incentives might be? There's been all sorts of stories with other banks incentivizing their brokers to sell mortgages or other products and things. Asking those types of questions can help to flesh out where the decisions are being made. And frankly, that's one of the things that we feel fortunate in our world. We can speak out about these things. We can talk about the nature of the business. Whereas I think if you're trying to manage 15,000 advisors, there's less autonomy among those advisors to talk about kind of the experience of providing advice. We would encourage you, if you do have questions about your advisory relationship or how to ask the right questions, or just what's going on behind the scenes that influences the way you receive advice, happy to talk about those things at any time. So, Cody, I did have one question for you. If this whole financial advice thing had not worked out, what was plan B?
So my major was personal financial planning. So had a finance background. I probably would have gone into like financial analyst. But if I didn't do that, honestly, I don't know. I never really thought about maybe pharmaceutical sales or something around that.
Yeah. I was a history major, and I think I would have gone to law school. In fact, I was on that path until I was stopped lost in the Army and couldn't get out on time, so I had to go get a job because I couldn't enter law school. Which, this is a lawyer joke-free YouTube channel, so we're not going to make you jokes about being an attorney or what bullet we dodged there. But could have been very different. But it really takes some tenacity to weather the ups and downs of making it in the business, and that's why one of the things we want to do is create a culture where young, talented people can thrive in there, because it's going to be needed. There is a talent shortage out there. All right, well, thanks for joining us. If you have any questions about the advisory business or this topic you'd like to hear us talk about in the future, let us know, and we'll catch up with you next week.